So I don't know if you guys can hear me. So this is the trade that I took that is currently running. I'm gonna take something off. So this is the trade that I took. It is based on Breaker, the same model that I use every day. So what happened is there is this fair value gap that formed at around 818, and then market consolidated below the fair value gap. Yes. So when 930 opened, market manipulated going up, filled the fair value gap on 1 minute time frame. And this was the last down close candle that is big body to body before price decided to buy and sweep all these consolidation you can see here, the whole of this one, sweeping all this consolidation into filling this fair value gap. So I marked this last up close candle as my my order block that pushed price up, and then I waited. The news violated the order block, but then closed inside the order block, so I would not have taken a trade there. And then the next candle closed below the order block. So now this had confirmed a bearish breaker for me, and I was only waiting for macro time to enter the market. So around 10:10, when market got back up here, I took my entry, and then when market closed below this bullish fair value gap and used it as an inversion, I knew that my narrative for selling will hold, and that is what I've been holding the whole time. So I took a sell based on this breaker and only this liquidity here in reference to this small fair value gap, because when price consolidated below this fair value gap, I was expecting it to be filled, and then I marked this order block. So what happens is, if this market was not selling, it would have maybe violated this order block, come back here, and then close above it again. So that is why I did not, when it closed and then started rejecting even below the fair value gap to make it an inversion, I had the courage to know that my narrative was holding, and hence I've taken this trade all the way to down here. I've already taken partials, 70% around somewhere here, and I'm waiting for the rest to play out. So that is how I've taken that sell. So all you have to do is, once you mark the last down close candle before liquidity is swept, just hold. You wait for it to get violated, and then if there's a PDRA down here that is you're looking to support your narrative, for example, you see when this happened, when price came below this inversion, this fair value gap to make it inversion, that is why I've taken my trade around here, because I knew this is a sign that the market is already telling you that we are going down, and the reason why we are coming back here is only to retest this breaker. So, and then I've taken my trade there, taken some partials here, and I'm still holding up to this 5-minute fair value gap. This 5-minute fair value gap was unfilled yesterday, so that is my target for today, as you can see. So that is my trade, unless anyone has a question or wants us to go through something. So somebody is asking me how I do my top-down analysis. So I'll just take more partials here, around 20, and then I'll start explaining. I'll move my stop loss to that. do you consider higher time frame bias? Huogopi news. Which news are you talking about? Because I took the entry after 10 a.m. news. So somebody is asking me how I do my top-down analysis. So let me show you. I'll remove these positions from here. So if you look at this chart, I have already marked most of my PD arrays. Let me hide. I'll remove these things that I've used to enter the market today. So I usually start from weekly time frame, and as you can see, I had marked a weekly fair value gap down here, which I believed price is most likely to hit. So that is the only PD array, and maybe this low here that I marked on weekly. And then you can see on daily time frame, there was this small, very small daily fair value gap here, and these equal lows. So I was actually in favor of the market coming to these equal lows before buying, because they are the nearest liquidity than this one up here, which has an order block which might stall price here. So I was actually in favor of price coming back to sweep these lows. I can see my take profit has been executed to sweep these lows and then enter into this fair value gap. So what happened today is, in fact, I've just got home at around almost 10. So I've only checked what the market is doing on 4-hour time frame. And as you can see, I thought maybe market is coming to fill this fair value gap here. So initially, I was looking for buys. But then, if you look at the market at around 10, especially on 1 minute time frame, I came home at around this point here. So the fact that this fair value gap was holding price, you can see what it is doing to price, holding it, and then even here, it started even closing below the fair value gap without even considering going back into it. So all I had to do was mark this order block and trust it to be my breaker, because if you look from this perspective, the London highs, which are up here, had been swept in the New York. And then this sweep, even though it swept the London lows, for me, it wasn't a convincing sweep. And the fact that market was respecting this bearish fair value gap and closing below means that if the market comes below this order block that I had marked here, I don't really expect it to buy and come back here again, because this is the last down close candle, and these highs here, this consolidation is liquidity that is here for people that were selling. So when they got swept and then filled this fair value gap, and the market respected this order block the way it did, this is during news. So when news was on, I was observing. So this is during news, and then market closed below the fair value gap. And even though it started coming up, this closed below this fair value gap to make it inversion. This is already an indication that this market is going to drop. And the only reason why it's coming back here is to mitigate maybe this order block you see here, and then touch the breaker to give people entries. And the fact that this fair value gap has been violated like this, because it should be holding price like this. You see these 3 candles here. For this fair value gap to hold its narrative, it should be holding price like this. But the moment this happens, this thing here, this one shows that price is now not respecting this fair value gap, and it's going to use it as an inversion. So when the market came back here at around 10:10, which is exactly macro time, is when I took a short, and then I looked for the nearest lows and PDRA. The nearest lows are these lows here. You see these lows that are here. And then this 5-minute fair value gap that was unmitigated. So, and I am content with that. I know the market could sweep these lows and fill all these gaps, but then I'm satisfied with the price action that and the trade that I've taken today, and taking my take profit from here is fine for me. So for the people who are asking, do you consider higher time frame bias? Yes, I do consider higher time frame bias. But then again, you can trade without a bias. And the only way you can trade without a bias is if you are a scalper per se. For example, my target is on 5-minute fair value gap. My entry, which is here, is on 1-minute entry. So this becomes a higher time frame bias for me. I mean PDRA for me. And then you see here, you see this liquidity that was swept here. it's based on 1 minute, because if you come to 15 minutes, there is no liquidity here. But then on 1 minute, on lower time frame, the whole of this is a whole consolidation. So this trade, I did not use higher time frame bias. What I used is this liquidity swept here, London session highs, the fact that they have been swept here, and then now using these PDRs that I've marked here on lower time frame to see how the market reacts from it. For example, when market came here and then rejected, and then the next one did not even touch the fair value gap, but then closed below the 1 minute order block that I had marked here. This is telling me that this market is creating a downward momentum, and I'm leaning my whole trust on something that I've learned over the years, which is a breaker, which is this one here. And as I told you before, I always look at my breaker this way. Is it a high probability? What did we say a high probability breaker is? It is an order block that leads to liquidity sweep. These equal lows on equal highs on 1 minute into a PDRA. This is a fair value gap. So this order block has already fulfilled its part as an order block, and then has it fulfilled its other part as a breaker? Yes. For example, displacement, closing, leaving a fair value gap here, and a small volume imbalance here, which was tapped. You can see the volume imbalance was tapped when market closed. So this was an ideal entry. This was also another entry, and this, so it led to displacement, you can see. And then after my entry here, does the breaker pushed price right away? Like price does not stall inside your order block or your breaker, the one that you've marked. And you can see immediately I entered the next two candles, pushed away, formed a small fair value gap, IOFED here, and then we sold off. You can see we've sold off here. So the most important thing for me when I'm trading is the PDRA that I want to take my trade from, or that is supporting my narrative, is it supporting, like, is it high probability, and the conditions that make it a high probability, have they fulfilled those conditions? You see, I could have entered the market here, and then if the market had stalled here, maybe coming back, coming below, coming back again, coming below, I would have exited and then wait for the next macro for me to take a trade from, because one of the condition of a high probability breaker is price should not stall near your entry. It should push price immediately, the way you've seen. I've entered here and then it has pushed price away immediately. So this is also something that I've used to hold my bias and know that this market is giving me what I want. So somebody is asking me, why didn't you consider the breaker just before 9:30? Let me see. Just before, which one now? I don't know. Maybe you can say the specific time. I don't know, but I don't see a breaker before 9:30. The only candle I would have considered maybe is this. But then why would I consider this if this high here, this one, the green candle here that has a high, and then you can see price referring to it here, and then this bullish fair value gap, most people would have used it to buy. But then for me, the moment price closed below, I'm looking at it as an inversion fair value gap, and you can see price used it as an inversion, came back into this breaker, order block, touched the breaker, and then closed below. This would have been another entry for someone who is unsure about entering from this inversion fair value gap or this breaker. These three PDRAs, this bearish fair value gap, this order block that has been violated, and this fair value gap that has also been violated, these three PDRAs should give you confidence enough to enter this market without fearing, because the market is already showing that it's disrespecting bullish PDRAs and turning them into inversions. So even taking a trade here is fine, and having your stop loss above this inversion fair value gap here is fine, because already three PDRAs have been violated. If I wanted to enter this market from this breaker and then it got violated, that is number one, and then you can see there is another fair value gap on top of the breaker, this one. Let me mark it in red, this one. If this breaker got violated, price came back here and I wanted to hold, maybe it's coming to fill fair value gap and then drop more, and then this fair value gap, bearish fair value gap, also gets inverted and violated, this is a sign for me to exit the market. The same way you are seeing me using these 1, 2, 3 PDRAs, to support my narrative that the market is giving me what I want. And that is why I was confident taking my entry here and then targeting the nearest PDRA. And as you can see, like I've told you, the market will take these lows, and then all these are unfilled gaps down here, and that is what the market is doing. But personally, I'm content with what I've gotten out of the market today, because it is not every day that the market does what you want. Sometimes you struggle too much to take to get the market, and 128 ticks is okay for me, and that would be enough for today. Kindly take us through your buys yesterday. Who said I bought? Where did you see I bought? Explain yesterday's trade. What are you guys talking about? Okay, so let me show you. This was yesterday's trade, and this trade was purely based on London session, the inversion fair. In fact, I've not even deleted it. So this is what happened. When I woke up in the morning, I woke up at around 10, and then this, I don't know if it's on 1 hour, I'm not sure. Yes, this 1 hour fair value gap, this one. According to my higher time frame analysis, my daily, 4 hours, sorry. According to my 4 hour, on Sunday, market was here, and then I had marked this 4 hour fair value gap, as you can see here, this one. So I expected, yesterday I expected some form of retracement into this 4 hour fair value gap. And then when you take this dealing range from here to where the market closed on Friday, you can see the premium, the above 0.5% is above this. So it's also above this fair value gap. So my expectation was that if this market will not take these lows fast, like if the NWOG will not open down and we start buying, we should buy at least up to 50% on the premium side of this dealing range. So that is why when I woke up during when I woke up yesterday, because I had already analyzed the market on Sunday, and then I found price here. You see this one. So when market, because that is where I took my trade from. So when market closed above this inversion fair value gap, I entered my trade here, put my stop loss here, and my take profit on this swing high here. You see this swing high, this one. That is where I placed my take profit. So, and I left. I had actually forgotten I have a trade running until I saw an email for take profit from Pepperstone. That is when I went to check, and then I realized this trade had played out. But the fact that it had closed above this 1 hour inversion, 1 hour bearish fair value gap as an inversion, that is why I took this trade. You can see. So this is the candle this is the London session candle. You can see it closed above, and then I took the trade from here. The only retracement that happened is this one, and my stop loss was here. So when 9:30 came, the trade played out well, and I received an email for take profit up to, I don't know if the executions are still there. I don't know. The executions are not there. Pepperstone does away with them so fast. So, but yesterday my trade was only based on this inversion fair value gap on 1 hour time frame. And then for the AM session, I did not take any trade because there was nothing ideal here for me to take. But then PM session, I tapered this PM session with someone I was engaging on Google Meet up to this high, this one here, the London. Sorry, that is not that one. This one. Where is it? This one. I tapered this up to this high here with someone that I was engaging on Google Meet, and we stopped there. And I can see price did some funny thing. But yesterday's trade was only based on London session, the 1 hour inversion fair value gap, price closing above it. And guys, there is nothing different I am doing. For example, this is a bearish fair value gap. Market has closed above it. I got confident while entering this market because this market has already shown you sign that if this is a higher time frame PDRA, have done here today. If you look at this is a bullish fair value gap. So when market closed below it, the same way it did to that 1 hour fair value gap, when market closed below it, it has been inverted and I'm confident enough to enter in this fair value gap here, or after it has been violated and then market retraced up and sell the market. So you can always trust your if you're buying, you can always trust your bearish PDRS to be violated. So that is how I framed yesterday's trade. I'm not sure if I had it here. Let me see. This is a trade from August. I don't know what is that. I'm not sure if I documented that because I was not on charts yesterday. Actually, I got that email while I was on Garden City Mall walking. So this is today's trade, and that is yesterday's trade, and how I framed everything. Unless anyone has another question. How many macros do you trade? I trade mostly 950, 1050, and then 250 and 350, but I don't trade all of them. I use them to analyze the market and to frame or support my buyers on where the market is going. For example, you can see this whole setup has formed this one. This is the breaker, this is the order block, and then 950 came. 950, after 950 is when price violated the breaker, and then a macro ends at 950 macro ends at 1010. 1010, exactly at 1010 is when the market touched the breaker again, and now from there distributed. So I usually use macros to frame the setups on lower time frame. On 1 minute, you cannot use a macro on 15 minutes or 5 minutes or 1 hour or 4 hours. It won't show you what you want to see or what you want to know. No news Monday, kwani huwa mna trade? You can trade anytime as long as there is a setup. I can trade anytime as long as I can identify liquidity and gaps in the market. I'll only wait for the right time and I will trade. So you don't have restrictions on how you should trade or when you should trade. Really, you can trade anytime. I think that's all.